I'll let you. Yeah, it's recording.
Yeah, cool.
All right. Um, so I'll share my screen. Can you see
Yeah,
my chart?
yeah, he's on now. Yeah.
Okay, so tell me like what's going on at the moment that you're having issues with.
Oh, there's a lot to be fair.
Yeah, it's
Where do we
fine.
start? Okay. Start off with the way you define order blocks. Yeah,
Mm-hmm.
because I think when everyone started off with SMC, everyone was told order block is probably the last OPSI candle that breaks a structure. But
Okay.
then
Yeah.
with the way you define it, sometimes it doesn't really, break structure, but then you consider it to be a order block.
Yeah. So for me, it doesn't have to break structure. Like for example, this one here, you
Yeah.
can see like it just straight away it reacts to there. It doesn't break. That's the closest structure, and it doesn't break it. So for me, like especially if it's engulfing, um, that for me is like a sign that that could be a good order block. But then again, I always wait for confirmation. So I wouldn't just, refine it to something in here. Like let's say if we go back here, Um, so so it depends really, but sometimes I'll use the body and sometimes I'll use the wick. So let's see. So then we can see over here, it's not much here. See, like if you were to refine it, it would be quite hard to pick one point here. But then also what I see is like you have this liquidity here. So you want it to be above that. So anything above, and then this order block is here. So, and then yeah, you can just keep looking, and you see what happens. We take out the liquidity. We're in a 4 hour order block now. So remember, like, just because we tap into the 4 hour order block, if you would have seen this as your break of structure, like, it's just, it's unlikely because we didn't take out any liquidity. Remember on the 15-minute here, we said these two highs are liquidity. So we want to take that out. And then once you take that out, then we can look for like a break in structure or something. So have a break here, fair value gap here. Now, most of the time, my rules say I have to enter at 50% or above. So I may have missed this trade. But if you took it from the whole order block, sorry, the whole fair value gap, and then you could see like it should at the least run to there. Because if this is going to be a strong high and that's a weak low, so it should run there. So you could be like, 3.94R. I'm happy to take it off the beginning of the fair value gap. Um, yeah, so that'd be that. But in terms of like order blocks, what I like to see, I like to like I don't really like order blocks like this. They're just like a wick, and I like a nice body of an order block. So like even though this one didn't work, something like this would be nice. Um, Here, if it's the opposite way, so we go a wick and then a body, that's nice. On the 1 hour yesterday, this was what my trade was based off. See this order block? That there is a nice bodied wick, and you can
Oh, you're
see.
saying yesterday because you're in Australia, right?
Oh yeah, sorry, yeah,
I'm,
yeah.
I'm calling it.
For Monday's trading.
Yeah.
Yeah, you can see it's a nice order block, and it takes it out. So I was gonna write in the chat earlier, but I didn't want to confuse anyone. But as soon as I saw this, I saw accumulation, manipulation, and then distribution will be the other way. And then if you look on a higher time frame, We tapped into a daily fair value gap. We closed it right here. So yeah, just here we closed it. So if we look on the 1 hour, we can see pretty much what happened. It just accumulated, went down, and then started to move up. So that's a good sign that that is going to be like a manipulation.
You know what I saw today? Because
Yeah,
when you go on the daily, if you can go back on the daily, and then yeah, what I saw was I saw when you look to your left, I saw a break of structure there.
cool.
Yeah, and then I measured from the bottom to the top of that, and then yeah.
Mm-hmm.
So in the
Cool.
morning, I was waiting for the candle to come down to 50%
You
of that,
wanted it there, yeah.
and then when I went to the 4 hour, I saw just above Asia there was an FVG there, imbalance there.
Here,
Yes,
yeah.
right. So if you go on the 1 hour, I saw stop hand of the Asia into the 1 hour, into the imbalance.
Mm-hmm.
So I thought it was gonna go down to 50% before going up.
Into 50%.
So
Got
I
it, got it.
sold.
So what can happen sometimes is basically price might not always get to 50% of a range. Now, it sounds like, oh, how do you know which range you're drawing from? Are you just picking it or whatnot? Well, for example, if ICT says a trading range is made when it's like this, when it goes down, and then once you get a break in the opposite direction, then you know your range is going to be from here to here. Now, in terms of like looking at this, so this is why I drew my range from here. I drew it from here to here, um, rather than the bottom, just because we didn't get a break in the opposite direction, because this low didn't make a high. This is like a little low, and this is the low where the energetic move started from. So I drew it from here to here. But even let's say for like you can't always look into every single range on the lower time frame. It gets too much. What you drew here, the 50% from, just gonna make it easier, from here to here, is completely fine. But what happens sometimes, if there's a higher time frame point of interest, like a daily in a daily fair value gap especially, or daily order block, it might not allow price to go all the way back to 50%. Like if you have a look at okay, it was actually in here it worked out well, but if you see here, I don't think this will be 50%. It did go to 50%. Okay, I'll show you the example today. So some people message me for my buy. They drew their range from here to here, right? And they wanted it to go back to 50%. But for me, I understood that we have the daily fair value gap here. We have a 1 hour order block here and a 1
So
hour
wait,
fair value gap
um,
here.
you know that
What's that?
you know that 1 hour order block there.
Yeah.
Because did you consider the 1, 2 plus the indecisive and the fourth candle? Because they're all bullish. That's why you said is an order block, is it?
Oh, okay. I consider order block. So sorry, I should have explained it better. Let's say this is the down close candle here. And then once the down close candle gets traded past with an up close candle, then I'll consider this an order block. So right now it's not an order block, not an order block. Once this candle here trades past it, it's an order block.
Okay.
And the thing is, I like to use the bodies more often than not. So even though this touched the wick here and it gave you a move up, I prefer that. And an order block with a fair value gap is stronger. And at that stage, when this candle touched it, it didn't have a fair value gap because this candle made the fair value gap.
Yeah.
Yeah. So
Yeah.
yeah. So again, what? Sorry.
Now carry on. Yeah.
Yeah. So it's the same. It's the same thing. It's the reason we didn't get to the 50% was because we had a big order block and a fair value gap on a higher time frame showing us. If we go to a lower time frame, well then we may have thought, oh yeah, here we go, fair value gap 50% and all of that. And that's fine. It's completely fine to think that. But this was me coming into the market. I thought, okay, so I haven't broken in the opposite direction yet. So it could be here, the range. It could be from here.
What do you mean
I
not
don't
broken
know.
opposite direction? Yeah.
What, sorry?
What do you mean not broken opposite direction? Yeah.
Okay. You see these lows?
Yeah.
No low got broken
Oh,
in the
okay.
opposite direction for that trading range.
All right.
So we have yeah, so I assumed it could be from there or it might be from here. But again, I wait for a confirmation entry. So I waited on here. And by the way, you were completely right. I looked for sells here because we took out, this is a lot of liquidity right here, a lot of liquidity plus Asian high. So we had accumulation, and on either side of accumulation, there'll be orders all resting above.
Mm-hmm.
So once we took out this, and we even gave a stop hunt here, closed the 1 hour. If I show you that, there's the 1 hour fair value gap being closed completely.
Yeah.
Yeah. So what we can do is look for a sell. So this is like obviously it's not in the right direction, but it came here. I had my limit set onto here, this order block there, because it lined up as well with near the 50%. So I was setting my limit here, um, and my target was here, basically the 1 hour order block,
Okay.
because there was a chance I wasn't. I did even think that I was thinking, oh wow, this is a lot of like trend line liquidity. It could get taken, but I'm not. Everything was showing. We're here daily fair value gap. We got the 1 hour order block there. Like I wasn't gonna. You shouldn't. It's harder to do in the beginning, but we shouldn't guess where price is going. We should just base things of what's most probable. So like most likely it's going to the 1 hour order block. What it does after that, I'm not sure. So I'll just close my trade there.
So
Um,
sorry, taking you back on the order block. You know the if you go left, yeah, that order block there. What was your
wait, where? Sorry,
so
here.
yeah, that order block? What was your characteristics for it?
So these are like you. So you know, what order block can be a few candles in one.
Yeah.
Okay, so I had 3 candles. So that was the up
Okay.
move or the up candles
And it
before the
got
down
broken by
move.
3 consecutive.
Yeah, and then we had the break. So we also
Okay.
had the break there. So it was like, and a fair value gap. So I always want to see a fair value gap.
On the order
Always.
block.
Not always on an order block. But if I'm entering on a 1 minute, yes, I want a fair value gap
Okay.
because even with my break of structure, if there's no fair value gap, I'm not taking it. On a one
Okay.
minute.
So you look for the fair value gap and then you look for the order block above or below it.
Yeah, yeah.
Is
So
is that it? If I'm correct, if that's what you're
say
saying.
say that again.
So if you look, if you go on the 1 hour for entry, you look for the fair value gap and then you identify the order block above or below it.
So like on the high time frame, so going back to the other one, like this one here, it doesn't have a fair value gap on the higher time frame, but I don't mind if it's a higher time frame because I'm going to get a lot of information just in this 1 week on on the lower time frame. So I'll get my 1 minute. Remember there was a 1 minute fair value gap that we entered off.
Yeah.
So I'll get that there. And it's obviously it has to make sense. So this 4 hour, this tapped into here,
Yeah.
which then created an order block, which
Yeah.
then taps here. So it's like, and we took out this liquidity here. So by doing that, I know that it's most likely going to move down. And even if I'm unsure, let's say we don't want to use this big range, we might just go to this 50%. Even if I'm unsure, I can take my profits at 50% here,
Okay.
or I'll take it here at that low of the candle. So like we can make it what's easiest. But yeah, for the higher time frame, I don't mind if it doesn't have a fair value gap, but on a lower time frame for my entry, it must.
All right, cool. Let me write that. Actually, hold on. Let me get pen and paper to write stuff down.
Yeah,
And I'm
sure.
gonna rewatch it, but I started right now.
Yeah, 100%. I'm gonna make it here. I'll write it down as well here, so you got it. Um, um, MRCA FEG.
Hello.
All right,
I'm back here. One sec.
sure.
So you said on the high time frame, on the order block, you don't really look for.
I
Obi, you
want to
don't,
see it. I want to see it engulfing if there's no fair value gap on a higher time frame.
and
Like
golf without
yeah,
FVG.
yeah, and I want it to be like I want it to have like a nice, like a big kind of body. So like that's got a big body. This one
Proper.
here has a big body.
Okay.
Yeah,
As in, the body should be bigger than the wick.
yeah, definitely.
More like.
Well, in this situation here, this is a bit of a weird one, but
Oh yeah,
this
it's
wick is
very
really
big.
long. So like I won't even consider this wick even part of the order block because the orders or the volume is in the body.
Okay.
Yeah, that's why you can see like some people, if they drew it like this,
Mhm.
they would have said, "Oh, we tapped the order block right
That's
here,"
it. Yeah.
and then they'll say it's been mitigated. But even still, actually, what happened is we mitigate it. If I go into it, won't go like too in depth to break it all down, but we had a equal highs right here of an old Asian high where liquidity is built up. So we really just took that out and dropped. It had nothing to do with the 4 hour fair value gap that they would have drawn from that week.
Okay. All right.
Um,
What
yeah,
did you type there to enter? I must see.
yeah. Wait, where was that? Yeah,
Okay. Okay. Another one that I want to ask. Trend line liquidity. Yeah.
yeah.
How do you easily see? Because it's everywhere, isn't it? You see up on your way down, you see up on your way up, you see it down. And then
Mhm.
if you're to follow what's going to get taken, like the trade you taken today or yesterday, whichever the latest trade,
Yeah,
just as the Asia was going up,
this was trend line liquidity.
trend line. So in my head, when I took that trade, I thought we were going to have all that trend line liquidity.
Bro, sorry, bro. It's a bit hard to hear. It sounds like your mic's like rustling.
Sorry about that.
All good. What did you say? Sorry, with this trend line?
Yeah, can you hear me now?
Yeah, I can hear you.
Yeah, so what I was saying was with the trend line, when I saw the stop hand of the H1 into the FVG, H4 FVG, I thought
Hmm.
it was gonna come for the Asia trend line there.
Hmm. Got it. Then this is all, honestly, it's
But it's
probably the
correct, isn't it?
hardest. Hey,
It's correct. It's a trend line liquidity, isn't it?
this is correct. 100% trend line liquidity.
Yeah.
100%. Um, the only thing I would say is that in every entry or most entries, most like liquidity, it doesn't mean nothing, but if you don't have direction right, it's probably not going to work. That's just the way it is because if even if there's liquidity here, if price needs to go up, it's not going to come for that. It just isn't. So we need to get direction right first, and then we'll focus on like where we target what liquidity. Um, so let's break down. I'll show you like top down how I do it. Okay.
Okay.
Um,
One more
so
thing before we
yeah.
go to top down.
Hmm.
How do you? Because one of the things that I really struggle with when people say, "Oh, we've created equal highs and then equal lows."
Hmm.
Again, they are everywhere, aren't they?
Yeah. Yeah.
How do you easily spot them?
Um,
Is it
so,
maybe I'm just
yeah.
asking myself, but is it when a high is created, like the last two ages that was created, yeah,
Are you saying this Asia?
the previous one,
This one?
no, the one at the top, in between those
Oh,
two,
sorry. Here.
yeah.
Here. Yeah.
So that will be because when I watch a video, you say that was a trend line. Would you call that again like equal highs?
Yeah. Yeah. Definitely. This was equal highs, 1,000%. This was very it was likely that this could have got swept this day. 100% it could have. But what happened, it got built up for another day. So that's why we have to look at a higher time frame. So you know what, we'll do top down analysis for this day.
Okay.
Um, if we pull it back to here, so we see on the daily, so we'll start from a weekly. So I don't really check the monthly too often or the weekly, but you might check it once for the whole month. I can see that we did tap a fair value gap here and we caused a reaction down. So that's literally all I would see. We tapped this here. I'm not going to go to like a minute chart. It's just now
Okay.
I might get a reaction from here. Then we also had the order block. I'm not going to break down this, sorry, but I'll go back to this one. But yeah, then we have an order block. Then if we go to like a 4 hour chart, you can see we swipe or sweep these highs and then we break structure here. So
Hmm.
now that's a sign that we're bearish. So then we can do this. So this actually, it does explain your trend line stuff. So using the point of interest of we have a daily order block, a monthly fair value gap, sweep liquidity, break structure here.
Hmm.
Now, if I draw this line there, so that's our 50%, we know that we are not looking for any buys, nothing, sorry, any sells in this area.
Hmm.
So you can forget about all of this. Then what do we see here? We see liquidity like that. So even now, it's unlikely that we're even going to look for a trade anywhere in here. It's going to be somewhere above there.
Above
And
the
then
last
when we
liquidity.
beg your pardon,
Above the last liquidity.
yeah, because it's pretty likely that it will go for this. If we've just taken sell side or broken structure here, now it needs to come back in and either tap into an order block or fair value gap, which it didn't have here. So then it's probably going for this liquidity because that's what it has to do. And then now it goes down, does whatever it needs there, breaks structure. Let's see on a 1 hour maybe. So you can see had a stop hunt here, broke down, comes back up, taps into this order block, and goes down. And then after that, once it starts going down, you can know that your bias is pretty much you're waiting for this now to get taken out. So coming into this day, you'll look for sells. Coming into here, once we take out this liquidity, look for sells, fair value gap sells. And then once it takes out this, you can see we start to go the other way. Take out old Asia high, just like that other example. Then we go lower. But we'll go to the actual example that I was going to show you.
Yeah.
So we've got a weekly, and on the weekly, what we have is there's an order block here and an order block here. So I preferred this one here just because the body was a lot bigger. So I drew that. Then on a daily time frame, we have this fair value gap right here. And this now it's just about like building everything up. So I've got a weekly order block and a daily fair value gap. Now at least what I want to see is like a daily or 4-hour breakout. So you can see here on the 4-hour, we didn't get that. We just got a
Okay,
wick.
so before you start anything, what you do is you mark out all the blocks or FVGs that you see on the time frame.
Yeah, yeah. So that's what I like to look for
So you don't look
is
for structure, nothing like that on the high time frame. You just look for those PD areas or whatever.
no, I still do. I definitely still do look for structure. So if you see we're going down, 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 and then here, down, and then we break right there.
All right.
So do you know what a swing high is? Swing highs and lows. So
Yeah,
so basically like yeah, when there's a lower candle to either side.
yeah.
So that will be that there. So now on a 4-hour, even though so I need a body to break past normally for me to consider it as a break. So even though this here broke, it was just a wick and it took out this as well. And then I can see it literally just, as soon as it took that out, it couldn't push up anymore and we went lower. And then we're still in that daily order block, daily fair value gap, weekly order block. And then on this
If
day,
you
we
want to
push
wait
up.
out 1 second. So you see that if you go to the last Asian just before where your cursor is on the left. Yeah, on the left. Yeah. So you see that swing, Asian high swing, the 4-hour swing.
Yeah.
When you cross it to the right, would you not consider that as a body break? Further right.
Here.
Yeah.
So the reason I wouldn't is because this here, when I'm looking at it like this, right? This here was it really rejected down. This wick as well really rejected down. This one, it did push up, but the easiest way to check it, when we're looking at it here, it's not really like, for me at least, it's not doing much. And you see what it left behind? These are the equal lows. And anyway, we don't have to like this is something I've learned that it also gives you a lot of like not as much stress in the market is right now this is like 1 p.m. New York time. So we're not gonna trade that.
Okay.
We're gonna well, I don't know about you, but I will trade like 2 a.m. to 5 a.m. That's probably
London.
London session. And then I don't normally trade New York because it's like late here, but 7 a.m. I think to like 11 a.m. That's like the hours. So anything after that, I don't really want a part of. And then moving back into this day. Now let's say we weren't sure, right? We weren't sure of if that was a body break or not.
Okay.
We can just wait for London and see what happens. And we know that well, we can see we broke really aggressively past it, and London starts here. So we're definitely not going to consider that a break.
Okay.
Yeah, I normally would like to see the candle push at least like close to that other one. But yeah, for me, it just was not a body break, sorry.
Sure.
Yeah, and then we get a 4 hour. So even here, so we have a look here, right? Now this is a situation where we don't actually get a break of structure, but we have this sell side liquidity got taken out. Then we had here again, it went lower. So if we go to, if we see here what happened, closes the fair value gap, pushes down. Now this can be an order block, but it doesn't have any liquidity feeding into it. And then if we see here, this could be a little reaction area, which we do get it goes down. But overall, if we're looking at this as a range, so like let's say we haven't seen this break yet. So maybe from here to here, this is our premium and discount, then this will be liquidity. So now we can do the same thing. We'll look for something in the discount of this range. So if we look like this, we can see, let's say we just draw another range from here to here. So we want something probably under here. So maybe this fair value gap. So if we go down, once we get this, then we can look on a lower time frame and go for buys. And then to be safe, because let's say we don't know if we're bullish yet, because the 4 hour didn't break out, this is all you have to do is just take your profit here and be done. Like, let's see on a 1 minute time frame, if there was anything, so, or 5 minute. So it was a little bit choppy. On the 5 minute, on the 1 minute, we get a break here. Let's say we're not sure if this is a break, right? We're unsure. We don't have to enter straight away. We can see it respects this fair value gap and pushes up again higher in, and then here. So then now we have, oh yeah,
Would you have said, the fair value gap that you just marked,
yeah,
the bullish candle, the bearish candle there, would there have been another block then?
100% order block as well.
All right, cool.
So we got order block here, have one here as well. So you could do it off there, off the fair value gap. So you got confluence of things. Also, we can see this, it's very minor, but it took out that low into this order block here.
Yeah.
So now you're getting a bit of like order flow, strong low created, push up, goes here, breaks again. And now if you draw premium discount from here to here, because this was where the push started, we can see there's a fair value gap here. So now we can just enter the 50%. Safe stop loss here. So we put it there. And now what we target will be, well, what we can target, or I said would be the safest on the higher time frame, is here for 7R, which is, if we just went to here would be enough, honestly, like 3R, but we can target there. So after that, we will let price just show us what it wants to do. And it just blasted straight up. So when you see prices moving like that, we have to wait at least for a 5 minute break. So what we have here, price went down, went like this, pushed down. But what do we have now? We have a 1 hour break here. Nothing that it reacted off really here. It was just a fair value gap, no order block. And then we've got an order block created here and a fair value gap. So let's say let's say I wrote in my channel, like, I didn't tell anyone. I was just saying for people to look for their own reasons. So let's say here we took out liquidity. Let's say we thought this was a break of structure. Yeah.
Yeah.
And we're wanting to go bearish because we are thinking that at the moment we're bearish. We just took out this high and we want to go lower. Now we see this as like an order block and we're looking to enter. We might even wait for an entry somewhere here on a lower time frame. For now, let's say we're looking to enter. So I'm going to put it back here. Let's watch what this 1 hour candle does. So, so before it's printed, this is what we have. This 5 minute order block, 5 minute fair value gap, and a major break right here. If we go to the 1 hour, we can see, so just going to make sure it prints. We can see, look at the reaction it has. That looks very, very bullish. Look how big that wick is to the downside. So it pushed all the way down, closed this fair value gap, taps into this order block and pushes up. So going to a 5 minute now, am I wanting, let's say we're on a 1 minute looking for that re-entry. Am I really thinking that a 1 minute break here, which wasn't even a break, it was just a wick. So a 1 minute wick is going to make prices drop?
Uh,
It doesn't even have a body break,
yeah.
and the 1 hour is showing that we're going to remain bullish. So now we get a body break. Now we get that body break, but we already saw not this candle, but this. Look at that,
Yeah.
respects the 1 hour. So instead, what we can see is go to a 5 minute. You can see that we have a big order block right here. So you could simply put an entry off like something like this. Also, something that gives you or gives me confidence is look how it respected that fair value gap and pushed up. So fair value gaps can be like a continuation. So taps it, goes up. Another fair value gap and order block, taps it, and we should go up. So yeah, um, or we can wait for a 1 minute entry, um, which is going to be pretty hard to get here. Let's see, didn't tap 50% and didn't tap this high. So I wouldn't have gotten that entry, but yeah, and then it just shoots up. So that, what, sorry?
If you go back on a 1 minute, please. Even
Yeah.
though you said they didn't tap onto that high,
Hmm.
why that high? What would you consider that high? Didn't
I
tap
don't
onto.
know. I don't even know if I consider it something in like something specifically, but I've just seen it many times where like if there's a wick over to the left or something like that, it normally just will come into it and then it could go up. But now that I'm actually analyzing this like better, I can see there's the fair value gap there, so that's like a balanced price range. But then again, if it doesn't follow it might not follow my risk to reward rules as well. Because for me to be safe, I should place my stop loss there. So I need to know how far could I take this. Um, yeah, but that's up to you, your entry. Some people might say they only want to enter at the close of a fair value gap, which is fine. Some people only want to enter at an order block. Some people breakers. I like my way. Just I make sure I'm in the trade, still get a decent risk to reward. So,
Okay.
or some people might want to just enter directly off that. And they could do that as well. Um, so now what we have here going into the next day. So I'll remove this. So we're aware we tapped into the daily order block weekly order block, daily fair value gap, and now we get a 4 hour break of structure. So we get a 4 hour break right here, and if we're unsure, even here as well, right?
Yeah, but
So
the bullish that big the last is it last bearish candle there where you are
yeah,
above that swing there was a H4 break, wasn't it? To the right.
here.
Yeah.
Um, the only thing for me is that it's hard. These candles annoy me just because technically a high, so like for example, this high, for it to be a high, it must break a low.
Yeah.
That's when it's a high. But this high here doesn't really break a low because it's the same candle. It's
I see that quite a lot as well. Yeah.
yeah, but yeah, so I don't know if I will necessarily like consider it as a break, but definitely like if we add everything up on the 1 hour and then we see this fair value gap, we can consider it and be like, okay, this is pushing up now. Like we can see that. So yeah, that's why it's important to look onto more than one time frame. And that's we'll get into time frame selection. So I'll write it
Yeah.
down here for you.
I've even
So
got that
I
on
I
my
keep it
sheet.
monthly. So just check it once, weekly, check it once. So check once, once for the week, pretty much check once for the week slash month. So with those, yeah, basically I just check. And if we're in an area like
And what
that I'm
method
aware
you
of,
checking for? Is it the PD arrays? Yeah.
yeah, exactly right. PD arrays, structure. Because if I see a weekly break, for example, like let's say even here, let's say I see this break here, I know we're gonna no, I don't know, but it's likely we're gonna move there a bullish once we get a weekly break, 100%. And then we had a weekly fair value gap here, and then we tap into it and we move away.
Yeah.
So yeah, I'll do that. I just checked that once daily. So this is now um how I do top down analysis each day. Daily chart, POIs. I'm not going to write POIs in structure just because I think you know that now. Daily
Yeah.
chart, 4 hour, 1 hour, 15 minute, and then 5 min slash 1 min. Actually, I started using the 3 min a little bit, and 1 min for entries. So basically, what I'll do, I look for now we'll break it down so you can see what I'm looking for on each time frame. So we go, where does this day start?
So
So
on the daily is the POIs. Yeah. Uh,
yeah, yeah,
okay.
daily POIs and structure. Because look at this, even though if we look at this, we went down, wick this, broke structure. We went up. No break bearishly, no swing has been broken. Now this here is actually a swing low. See?
Yeah.
Now it's just the wick, but on the 4 hour, that was that break that I showed you. And we can see that just once that got broken, it started this whole move down. Then no swing high broken, no swing high, no swing high. Here, swing high has been broken, and that started the bullish move that we've just been having.
Yeah.
So I'll look for that and then I'll look for point of interest. So on the daily, all I see now, oh yeah, and then we had this order block. So this was a question you asked me. How would you
Yeah.
know this order block? So um sorry. So with that order block, I'm not looking to take a entry straight away. I'm just aware that that order block can push us lower. So you were worried that like you're gonna miss a trade, I think you were saying.
Yeah.
Now look at this. We have a daily order block and the 4 hour order block here. So this is how I would go. So if I bring this closer. So I'm going to remove this because now we know the daily is here and it's in line with the 4 hour order block. So price now, we've taken out this high, the 4 hour. So if I want it to retrace, so I'm going to use the smallest range possible. sorry, go to 1 hour. And this is a big rule, and I think it will help you a lot. Price must always tap a POI or take out liquidity for me to consider a proper structure break or me entering a trade. So basically, what I mean by that is like price right now could do this. I don't remember this, how it's reacting here, but price could literally go up, miss it, and break down. If it misses it and breaks down, I'm not going to look for a sell here because it didn't do anything. It didn't touch the point of interest. I need it to come up first and then touch it. So going into the London session, I'll mark that out. And now what I'm seeing here is on the 15-minute, we haven't had a break. And if I'm on a 4-hour chart, I want to see price at the minimum that, or like the lowest fruit, as ICT says, will be here, this 50%. So now once we get a breakdown of that, we can see what happens. So going into this day, very choppy. All I can see here is not a whole lot. We are bullish at the moment. You see, high, low, and now we're doing not much. Then we have this break here, but it was just a wick, so it's not that strong. This low never broke a high, so that's going to be weak. And we see it gets taken out. Mind you, we have a thought that we're bullish. We haven't had a break in another direction lower, and we have the 4-hour order block here. So now we go for a 5-minute, for example, and I'll see that, okay, perfect. We have a wick here, and this is what I mean by like let price just show you what it wants to do. So we have a wick that gets taken out, a wick here taken out, a break of structure right here, and then a body and a fair value gap. So now it's pushed up. Now it's just unfortunate that this move came before London.
Yeah.
So I won't take
you
it.
strictly trade only London now?
Yeah. Because New York starts at the moment. New York starts at like what time is it? 9 p.m. 9 p.m. to like 12 midnight or 1 a.m. So yeah, I get too tired and I'm just like, I don't want to do that. Yeah. And then so here we get this. So we get price going lower. So what we can look for, I'm not gonna wait. If it's a 4-hour order block, it's in a daily area. I need to see more than just a what you call it, a 1-minute BMS. So on a 5-minute, what I see here is we have a shift in structure. So price goes down. Oh, this is shocking, but yeah, you basically see it goes down here, down. So it breaks there. What I want to see though, not just the shift, but I want it to come back here and take out this liquidity. That's what I want to see. Once it takes out this liquidity and wants to move lower, then I'll want to get an entry. Now, what I can see here is, again, you see the body was never touched. So this is literally inducing this order block. It never got touched.
What do you mean body was not? I think, is it not waking into the body, the bullish?
This here? Sorry, I meant here. See this?
You mean the first one? Okay, cool, yeah.
Yeah. So a lot of people, again, they will draw this and say this got mitigated. And now what they want to do, they want to take it, the next ones like this. So of course now they going to get tapped out, but we're going to be better than them. So this is where I don't even like if it's four pips, that's all that was. And it's a 4 hour, we're at the high. So I could hold this, like look how much potential there is for holding it. There's lots,
That's
but
crazy. Yeah.
I'm gonna be probably safe and I'll take it here or here because what can happen is price could easily tap in, go down, come back, tap me and go. So I don't always hold it. It's funny on FXCM there was right here. I actually took a loss this day because I was looking for a re-entry and I was being stupid. Basically, long story short, I took an entry in here, even though this here is equal highs. This was just from impatience. On Fridays, I have to finish trading at like around this time, 3:30. So I just want to get into the trade. Um, I got taken out, and then there was a fair value gap here on this side. So there was a BPR on FXCM. So
I know
that
what
was the
BPR
actual
is.
thing. Yeah.
I see a lot
But
of people talking about BPR, but I don't know what it is. But probably we'll jump onto that later on.
okay, so I'll show you. So BPR just means there's a fair value gap on both sides. So see how there's here fair value gap there, and then when you draw it through, there's a fair value gap here as well.
Oh, okay.
That's all it is.
Is there
So
not another name for it when you've got fair value gaps on both sides? No.
there might be. I don't know.
I
There
think
could be.
yeah. All right. It's all right. Going back on where it tapped into the OB when you go back on the 5 minute,
Hmm.
not this side, the actual floor OB on the left. So you know where it actually wicks into it. If you go back on
Yeah,
the 5 minute. So because in my head I would have waited for a break on the left. So
a
you know
break. Let's
where the
say
left,
here.
yeah, yeah, that's where I would have waited for.
Okay. So
But
for
you,
me,
yeah.
yeah,
So why did you not wait for the break on the left side, but rather you chose to use that OB, although that OB you saw a leg, a leg like the structure on the left side,
yeah.
but you
So
didn't break that.
I'll show you. So I have two things. So I would like to either see price break, let's say on a 5 minute, and do something like that, or maybe it will do something like this. Or if this is far away, I'm getting a lot of information in here. I don't mind if maybe I'll draw it like this. Let's say we go here, and then we get a shift in structure, and then the high gets taken out and then goes there. So I'm not gonna sorry, I'm not gonna enter directly off anything here, which would be here. So do you know what a shift in structure is?
Yeah.
Yeah, cool. So I'm not gonna enter off that shift. The high or one of the highs after
Well, I know
the shift.
shifting structure, the other one where the highest high gets taken or the lowest low get taken before the
Okay.
actual shift. But whereas this one is like the SMT bit of it, not that one.
Yeah, cool. Okay, so for me, I'll consider this as like a break of structure because this is a low. But let's say we don't have, let's say the low is too far away.
Yeah.
This is like when a low, an internal low gets broken. So
Oh,
like this low, this high, and then this makes another low here, and that gets broken.
mhm.
Once that happens, so we go here, low, high, this low here gets broken,
Yeah.
then I'm waiting for this to get taken out. Because for me, I sometimes these shifts happen. ICT says like in his 2022 YouTube model, he said wait for liquidity to get taken out and then a shift in structure or break. But I've seen too many times it will do like this and then it just shoot up. That's why I
Yeah.
like to see it get wicked out. But then here I knew we had inducement into there. So yeah, could enter like this, safe stop loss above there, targeting something down here. This is always going to be your safe target over there. But yeah, it's annoying because on FXCM, you would see that this was clear, clearly taken out there. Also, if I was looking for my re-entry, there was nothing here that I could have entered off because this was just a wick. And then this, sorry, and then this, we do get a body break, but then we have equal highs. So I'm expecting that to get taken out. So I would not be looking for a trade anywhere in here.
I
And
think
then the
I need to
next,
go with this equal highs because I think I'm blinded. That's my blind spot.
what,
Yeah,
what was that? Sorry.
the equal highs. I think that's my blind spot. I barely spotted.
Yeah, it does take experience. Like you'll see it more and more. But yeah, if I see all of this stacked up, that for me will be like a equal high. Or I just don't want to see that near my entry because it's yeah. And here's also remember that. So here the 5 minute, this week here, if we look on the 1 minute, it's actually equal highs.
All right.
So I didn't know that until I just looked on the 1 minute, but that gives us more hope or more confidence
Confluence, yeah.
that this is gonna be there. So yeah, we could have entered directly. Unfortunately, if we waited for confirmation, um,
You would have missed
yeah,
it.
we'll have missed it unless it's coming back now. But okay, sweet. Okay, and then price pushed up higher, so I would have been break even on this day because my rules, what it says is that once I get a break of structure, I'm going to go break even. So unless I took my TP at 3R, then I'll be break even. But now what you get, you've got your break of structure. So now you could, which is actually even better. This is where like honestly patience just pays off. You break here.
Hmm.
Once you break here, this was actually a very choppy day. But once you break here, we have you can draw your 50%, right, like this.
Hmm.
Now, this could be an order block, but we have to think of it like this, right? If we just took out liquidity, so not every high and low, but there is sell side liquidity on lows, right?
Hmm.
And then there's buy side liquidity here. So normally what happens, price takes out, sell side moves to some sort of buy side and vice versa. So it takes out sell side, then likely it will be buy side liquidity that gets taken out there. And now what gives you confidence that this will go lower is all these equal lows, stacked lows. So what you can do simply is wait here. So even if you did think that this is an order block that you wanted to use, let's say you're waiting on a 1 minute, this is why I like confirmation entries. You will see it's just a wick that broke here.
Yeah.
And there's not really like a clear order block with a fair value gap anywhere.
All right.
The fair value gaps are all the way in the discount where we want them near order block. So then what we get here, we get this break here, which it did end up breaking it. See how it see how it actually pushed through after
Yeah.
us this week. So that's what I like to see. On a 5 minute, we also can see this.
It's a break. That's a break, yeah.
Yeah. So you see the difference with the other one? The other one, the wicks, that 4 hour you were asking about. The other one wicked here, and then had one candle that went. But this one straight away after it just broke through. And then we've got a big fair here you go. Good example, balanced price range. Or I think the other name, like Toast,
Mhm.
the
Nah, never
trader
heard of that.
Toast. Okay, he calls it FTL, but
All right.
ICT calls it BPR. So balanced price range, and an order block. So you could even, without going on a 1 minute, you could just go like this. Um, on the 1 minute, oh yeah, always a little bit of premium and discount. And then you know you're looking for something in here. So if you wanted, you could say that's inducement into this order block. So you could just put it there to make sure you get in the move. And then you're targeting these, that's your safe target here, all these stacked lows.
Yeah.
Um, and yeah, this was NFP. That's why
Mhm.
it's moving very choppy. So I actually, going off my rules, I wouldn't have been taken out at break even because I didn't break this low yet. So, or if you did go, like, let's say after this break and you went break even, then I actually, you know what, I probably would have gone break even. If I get that close, I will have moved it to break even. So it is what it is. You get hit at break even as long as the direction is right overall, that's what's most important because you can always change your trade management rules.
Yeah.
Um, and then yeah, and then now it's just about, so if we look now on, let's say like a 1 hour chart, um, we can see where price bounces up from. So bounces from here, fair value gap, pushed it up, but this fair value gap's in premium. So it's not going to really do too much. Um, so we know when this pushes up, now we can look for sells again. So that's where we get a 4 hour break. And so we're coming back to this example, but we get a 4 hour break. Now we hit I'll draw it, leave it there. 4 hour break bullish, but we tap into a 4 hour bearish fair value gap. On the 15-minute time frame, let's say this is just a wick for now, so wait till, let's say we break right here. So now we've got this break here on a 15-minute time frame. We can say that we have our range. So we draw it just from here to be safe rather than all the way. So we can look for sells up until this area pretty much. So any bounce that comes back here is not going to be a break of structure. So I don't know, on a 5 minute, let's say here we had a break on a 5 minute. We know that this is just to make it, it's taking out liquidity just to go lower. Do you get that? Hello?
Yeah, I'm here.
Oh, sweet. I'm just making sure that you get that because that's
Yeah.
very important for
Yeah.
correction. Okay, cool. Yeah, and then we take out liquidity rather than breaking. So now we keep selling, selling, selling. And that's how you could have, and that tapped into a 4 hour fair value gap as well. Sorry, 4 hour order block.
Yeah.
Remember yeah, we were doing that. That was the
Yeah.
early example. And
Yeah.
then we took out this liquidity. And then on the 1 minute, we said we can do the entry of the fair value
Um,
gap.
when you look at
Yeah,
it, it looks like if you want to go back on the H4, please. If you want to mark out that order block, um,
this one.
yeah, just highlight it.
Mm-hmm.
Yeah. When you go on 1 hour, yeah, the way I'm seeing it, it looks like every high time frame order block is either a strong high or strong low in the lower time frame, isn't it?
Pretty much, yeah. Like that's why it's so important to base your trades on the higher time frame. Everyone thinks that just because you take your trades on the 1 minute, they think all you do is the 1 minute. But really, if you think of all the analysis that just happened, we waited for the daily and weekly level to be hit. We got a 4 hour break, daily and 4 hour order block. and then we simply wait for like a 15-minute break here. There's a 4-hour order block again here. And then in the end, we just enter off a 1 minute because this helps us get a better risk to reward and it helps with confirmation entries.
Yeah. Okay.
Yeah.
All right.
Um,
Gee,
yeah.
I don't know how you manage to get your head around this, but it is really hard, isn't it? It's not easy.
No, it just takes honestly like it's gonna be practice, if I'm honest with you. It's just gonna be practice. So we can do another example here, right? Now that price has gone back into this area, into the, now we can say, all right, it's using this whole range. It's using this. So when we do this, we know in premium, we can look for sells, and in discount, we look for buys, right? So what we can do here, simply more or less the same thing. So, sorry. We'll go back to here so it doesn't show. So on the daily, same thing again. We take out this, we respect this and the weekly order block, we break structure. So it becomes like almost like you're doing the same thing over and over and over, 4 hour. So after we get a break, we want to find out our range, our trading range. So we draw it from here to here. So we got our discount and premium. Now we've got in discount a fair value gap right here, right? On the 1 hour, we have on the 1 hour here, now we have this wick, this very, very random wick that's just sitting here that has, even though here's the 4 hour fair value gap, why should this wick hold? It doesn't make any sense because, well, one, it just looks, I don't know, you start to pick up an eye for it. But then afterwards, we've taken out this liquidity here, so we should go for some internal range. And this is the first bit of internal range liquidity. So this will probably likely get taken out. And then we have a 1 hour order block here.
All
So
right.
if I draw
Did that
the
wake come
body,
into the? Oh, it didn't, did it?
just missed it. Just missed it. And then we can even look inside of this 1 hour order block and we can see inside here, we have this fair value gap here and this fair value gap here, which is a balanced price range because it's on one side and the other.
Yeah.
So we can draw out, you don't even have to draw out all these areas because like in terms of this, but it's just good to know it's there. Here's the 4 hour fair value gap, which we don't need anymore because it's likely we're going to take this out, and that was where that is. So we're basically wanting this to get taken out. We're wanting price to maybe go into here, but we definitely know we want it on the order block. So now going into London, let's mark out 2 a.m. to 5 a.m. Price drops. So coming into here, we have price taps into it. So how could we have maybe gotten a trade during London? So what we could have done is this. Now we have price coming into, draw this over. We have price moving lower, right? We can see clearly it's going lower. Now,
So 1 second. You
mhm,
know, as price is coming down,
mhm.
do you start seeing the trend line liquidity there? Is that how it works?
As in like this
Yeah. So if you and then just above the Asia high on the left side
here, yes.
would
So this
then the
is,
high.
yeah, exactly right. And then this high. Now, it's like a chain of events. So you can almost think of it like a program. Like if this, then that. So just because this liquidity is here doesn't mean it will get taken out. It means that it has to do something to make it go that way. And
Yeah.
this shows us, this is like a magnet showing us that once it does this, that is going to happen. Geez, that looks not good. So yeah, so like basically that's what we're waiting for. So we're waiting for something in a discounted price, so an order block, a fair value gap, liquidity taken out to make it go higher. This might be a little bit confusing, but this here, even though we did tap into the order block, you can see that we just wicked this. We didn't break it, correct?
Yeah. Can you go on the 5
And
minute
then,
for me, please?
of course, I'm just going to draw that out. So 5 minute. You can see that we wicked it there as
Not
well,
even the body. Yeah.
not a body. And this is a really powerful setup that I really like. Basically, price goes down, up, down, sweeps that and goes lower. Has to sweep it into an area of interest. So we have an order block when the close of a fair value gap. Price sweeps the high. Now, so it's like the whole if then if
System.
you get what I'm saying. If, yeah. So even though we tapped into this order block and we took this out, we didn't get that break. Even on a 1 minute, we can see this high here. All we can have is this right here. And that's a wick on that time frame. So now what do we see? We have a break finally here once we push through it, or here, whatever we want to see. And now we've got the fair value gap starting here to here. And it's a balanced price range again because it's on the other side as well, fair value gap.
Yeah.
So this is strong. Plus we have inducement here. This was actually a really annoying day. I remember it now. So you could take the trade, let's say from here to here, just whatever makes sense for this target. So for me, I need a 3R minimum.
All right.
So, and that was close to it there. And I knew that there was a chance we could run a little bit past it. So I want to take it at the upper limit rather than that. So price went down, comes back up, taps us in here. And then it pretty much just consolidated the rest of the day almost, or the rest of London session. Almost tapped me out, but it didn't.
Phew.
I got hit at, I got taken out at break even.
Yeah.
I didn't like the consolidation, so I pushed it, even though my break even really at the earliest should have been here,
That low. Yeah.
at the very earliest. So I broke my rules and it cost me because instead of me making money, I ended up paying commissions. So yeah,
Oh,
it
you take
is
commissions
it's
because you're on higher funds, aren't you?
yeah, so like even still, it's all relative. So like let's say let's say can do like position. Okay. Let's say if you're on 100K account, so 100K, let's say you risk 1% per trade. If you have a 2 pip stop loss, you're using 50 lots. Now let's say this is $5 per lot. Now you're paying $250. So your trade, that's just an extra 0.25% you have on your trade.
Yeah. That's a lot.
Where even if you have $1,000 and you risk 1%, even though you're risking $10, if you have 0.5 lots, that's 5 times 0.5 is $2.50.
Yeah.
Again, it's an extra 0.25%. So it's all relative.
Percentages. Yeah.
So yeah, exactly. So unfortunately, yeah, I broke my rules and it paid. It cost me, I should say. Um, so now we move into the New York session. So even though that was like kind of bad, that choppy price action. It did exactly what it needed to. And we didn't get a confirmation that's going higher. So now we just do the same thing. We'll wait and see something happening here. And what do we get here? We have a sweep here of structure, and then we get a sweep here. Now, this is where it's like it can get tricky because what sometimes I've been seeing, and this I would say back test it yourself, but sometimes when I see a sweep on one side and a sweep immediately on another side, it can work. But what I like to do then is drop down to like a 3 minute chart, not a 1 minute, but a 3 minute, and just see if we get anything here. And we do get a fair value gap here. So I will enter, so either I could enter like off the top of it, or I'll enter 50, we'll draw it out 50%. So yeah, just like here. So that'll be my entry. And then now is the beauty of it is, so that trend line liquidity, all this trend line liquidity that you were speaking about,
Yeah.
here, all of this all now becomes our target. So we can target here, 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 and ideally all the way up here. But
Imagine that.
this, yeah, exactly. Like it's
You have
crazy. Like if you
to
have
stay
a
with it.
hundred, what, sorry?
You have to stay with it for a long time, though, isn't it?
Yeah, exactly. So, oh, whoops. So go to a 5 minute chart. So we had the entry here, but let's see what happens. Let's say we wanted to see that 5 minute break. Now we get that. Now we go to a 3 minute chart. I'm just going to delete this, make it cleaner. So we get that 5 minute
Quick
break.
question.
Yeah,
So you know when you're waiting for the entry,
yeah.
then let's say you have a fight like you just seen now 5 minute, but there's no fair value gap.
Mm-hmm.
Because one thing that happens to me pretty much 100% of the time is when I see, let's say I've got a 5 minute break, or maybe I've got 15-minute break, but then I don't see an FEG. So I decide to go on a 5 minute and I'll see an FEG and I'm like, yeah, this is good to go. I always get wiped out.
Yeah. Okay. Yeah,
Yeah.
that is fair. Normally, I do like to see a fair value gap. Um, but in this instance, the reason I'm not is because of this. So we've broken now this here. This here is going to be sell side liquidity because we had, it's basically the same thing again, accumulation, manipulation, distribution. So the same thing that I showed you from today for
Yeah.
you,
Yeah.
it's the same thing here. So, and the thing with the 5 minute now, the next break will be here. So I'll want to see like, say the 3 minute is showing me something here. But if we go to a 5 minute and now we get this break like that,
Hmm.
maybe now I could go to a 1 minute and have a look at, okay, what's been happening here. I can see we swept this, we're going lower. Sorry, so now off this, there's a number of ways you can enter. So if you're unsure, just wait a bit longer. So let's break it down. 5 minute, but we're a bit worried because we don't have a fair value gap, right?
Yeah.
We can see price has reacted nicely off this order block, but we're still unsure. Okay, we'll go to a 3 minute. 3 minute, we can see, okay, it's pushed up, it reacted off this, pushed up nicely, swept this low, broke it. Okay, but we're still a bit unsure. Go to a 1 minute. 1 minute, we sweep these equal highs and we break above quickly, and we have now a fair value gap created.
Yeah.
But we're still even a bit unsure. So we're going to wait. We want to see the reaction that happens here. Now we're getting a bit worried. We're unsure what to do. Now we see this. We see a sweep here.
Yeah.
Sweep here. And this low we are wanting to hold to this high. So we're in a discount. You get the sweep, order blocks there, fair value gaps. Now we wait and we get, so no break yet. Now we get a break. Once we get this break here, I will enter right here once it comes back. I'm not going to bother waiting if it comes for here or here because this stop loss is so small and I'm already taking a lot of extra time waiting for the confirmation. So target up there. We get tapped in here.
So that'll be the
And then
fair value
now,
then.
yeah, so then you could use that as the fair value gap. And unfortunately, we'll be hit at break even. I was
Oh
news.
my.
It was news,
Imagine
unfortunately.
that.
I would have, honestly, even if I took this trade here, as painful as it is, if I took this trade here,
You would have still made it.
I I would have closed it because my rules say once there's news, I don't I don't have a trade open and I don't take it because let's say we are wrong. Let's say for whatever reason, you know what, let's just instead of thinking of yeah, let's say this candle went like that. Your stop loss is not going to do anything. It will take you out like that you got taken out at this stop loss somewhere here.
Oh, is that how it
So
works on news?
yeah, there's major slippage. So like let's say if you risk 1% for 2.2 pips, now that 1% is going to be almost like 10%.
Oh, so, oh, right. So
Yeah,
it just smashes through your stop loss and it stops wherever it wants.
exactly. So if you were in cells over here, it would like let's say you thought this fair value gap or whatever, and you wanted to enter like this, it would have probably taken you out at least somewhere like here because price is moving too fast and it can't fill the orders in time. Um, or it
All right.
can't price you
So
where it needs to.
which news do you not trade at all?
Any high impact news, so
Any red?
um, any red news, yeah. I'll avoid it. So what I will do, let's say, so today there is at 10:30 p.m. is New York. So that's like, yeah, that's New York. Just trying to think what time that's 8:30 a.m. New York time. So what I'll do, I'll just wait and I'll see like what's happening and then I'll try and take a trade. Um,
After.
but after, yeah. In this case, I wouldn't have got anything. But sometimes, well, actually, that's a lie. I'll show you. So it literally just comes. News is used for manipulation to try and push price to where it needs to go, just a lot quicker. So we now push into here. We go to a 1 hour. We close this fair value gap right here.
Yeah.
So what I might do, if price shows me, yeah, it's not very, nah, I wouldn't have taken this. If I was feeling risky, I may have taken like off this balanced price range, stop loss here, and then my target, it would have to be like a fair value gap or even just something there.
Right.
And yeah, I couldn't do anything. It's too risky to be honest. I would not take that. Um, yeah, and then now moving forward for the whole week because we've got the 4 hour, we can start to now place our bias that we want to move higher. So we don't know exactly what's going to happen. We could simply, because we hit a daily area, we could go a bit lower again, or we could have this fair value gap react strongly. So what I did in this day here, sorry, this day here, let's break it down from the start again. Oh my God, again. So the same thing over and over. Daily break, right?
Yeah.
4 hour, we have the range. Now we draw out our premiums and discounts. So we got premium and discount. Even now, if I draw from this low to this high, I have my premium discount for a selling range.
So if I'm correct, 9, 7, 10, when you have a daily break, you usually have a 4-hour break as well.
Yeah, 100%. You should have it because if a daily is higher than the 4 hour, yeah, it should be a 4 hour break.
And then you just mark out your premium discount.
Exactly right. Mark out the premium and discount. Then now I'm aware that we could tap into this 4 hour fair value gap and push lower into somewhere else to then go higher because we have this order block. Now, this day, my bias was wrong, but I still made money, and that's what I want to show you. So coming into here, we also have the 1 hour fair value gap, where a 4 hour fair value gap was as well. So price, where is 2 a.m. here, 5 a.m. here. All right, so now we have here this 50%. So this is above. So it helps to kind of like remove the noise that you don't need this one and there's
So
no other
if I'm
gap.
guessing, you're looking to sell to buy.
Exactly
If
right.
it goes above that, you're looking to sell to buy.
Exactly.
Okay.
So now what I was waiting for. So price tapped into here before, before the London
London.
session. So now all I see is nothing really going on. And if you see, we didn't get a break of structure. We actually created almost equal lows. So
Can you
this gives
go
me,
one minute for me, please?
sure.
Because I would have taken that. So that's what. Oh, you said we're gonna come to time frames after this. I believe.
What, sorry?
You said we're gonna come to time frames after this. So yeah, that's fine. Because I would have
Yeah.
taken, if I'm start using, let's say the 1 minute, I would have taken that swing there as a break, and then it's got a
Hmm.
bit of the swing low there on the left before it taps into the order block.
Yeah.
Yeah, sorry, FVG. So I would have taken that swing there
Yeah.
as a break on the right side.
Hmm.
So if
And then you would have looked for sell somewhere
yeah,
in
yeah,
here.
yes, that's what
Yeah.
I'm saying.
Yeah. So we have to remember this, right? We are, let's say, what's going on here is if we look at it on a higher time frame view, we have price pushing up, pushing up, pushing up, pushing up, pushing up, pushing up, not really breaking lows. So for us to think that a 1 minute break is going to make a whole thing just drop, it's it's unlikely unless it takes out a large amount of liquidity. And even then, I'd like to wait for some 5 minutes. Like it's just safer for me. So don't think you're going to miss out on a move. So what we can see here, so if we now go back to the 5 minute, so one, we hadn't hit our time. Two, we don't have the 5 minute break. And three, even if we didn't have a 5 minute break, so if price went like this,
Oh yeah, I think time there would have been a big factor for me not to take that 1 minute.
yeah, we don't have the shift. We do have a shift in structure because we broke this low. But then I would want to see
Okay.
this high get taken out. And there's no real order block or anything there for it. And then even if I look, so we push up and then it just kept pushing up.
Yeah.
So now what's happening is I don't want to go too far so it just shows everything. If we go to like a 15-minute time frame, we can see here's the 1 hour starting. These are 1 hour fair value, 15-minute fair value gap here, but we can draw it out. But the main thing is, again, I'm going to just go back so it doesn't show. We have a 4 hour fair value gap. We've got the premium price. So if I just draw this horizontal line here, premium selling range, 4 hour fair value gap, 1 hour, 15-minute even. So go forwards. So now we get this. We have price coming and taking out this high here. So now we've had liquidity being swept. Now, if we look on a 1 minute time frame, what we can see here, so this is the 15-minute fair value gap, but don't even think we really need it because inside of our 1 hour fair value gap, now we've had a sweep of this high on a higher time frame. So we can see on a 5 minute, it was just a wick. And on a 15 minute, it was just a wick. And on the 1 minute, now this, you have these equal highs, sorry, equal lows. And you have all this trend line liquidity like that. So this makes sense that a 1 minute BMS and we get this placement. A 1 minute BMS here can send us lower because now we've taken out liquidity. So then now you can look for your entry. So here's your fair value gap. You could simply take it off here or these order blocks, whatever you like. And stop loss safe here. And then targets, well, safe target here. But then we are expecting us to move lower towards this order block right here. But my target will be this fair value gap starting. Or we can just make it easy and around 50%, which is where that fair value gap is as well. So that can be your trade. Yeah, and then now we even get this. So let's say we wanted to wait for a 5 minute fair value gap. Sorry, 5 minute BMS. Here you get your 5 minute BMS, right?
Yeah.
So you get that 5 minute BMS here. So here, get rid of this, sorry. On the 15 minute, we have an order block right here. So it's annoying because it shouldn't have showed yet. So you get your 15-minute order block engulfed, took out liquidity.
Yeah.
Now we'll wait. So this hasn't been hit yet because this is the end of that candle. We get the break here, price touched it. So we can look simply for re-entries. You have 50% of this range. So we want to enter at least at 50%. Now, this is risky to put your stop loss just there. So I'll put my stop loss all the way there if I wanted to get in and then targeting the low, which was somewhere here. So you could do that as well. Maybe you look for another entry in here.
Yeah.
There are lots of entries. And then, yeah, so then price goes down. So even now, oops, clear this out so it's just a bit easier to see. So even now, when my bias, I'm expecting it to have buys from this area. Now I can see on a 5 minute, I want to get a confirmation that we're going higher. And on that order block, we're just sinking right through it. And it's past now the London session. So even though I thought we were going to be bullish, I didn't get a confirmation from this. Didn't give me one. But it gave me confirmations to sell down to it. So that's all I needed. My bias was wrong. I was expecting it to go here and up, but instead it just went like that. Yeah, and then price. So now moving into it, if we thought, like once you see price not really respecting an order block, so it's just kind of like moving lower and lower and lower. If we look on a 5 minute chart, what we get is, yes, we have a break over here. But when we look on a 15-minute chart, we can see this push up was just a grab. Exactly. And now if we go back to here, yes, we do have a fair value gap here, but now we've also had a order block created here. Now on a 5-minute time frame, we also have a fair value gap created here, and we can see the push is very quick down. So we can look for entry at the fair value gap, the order block, and then we can ride price down. So it didn't really give a confirmation entry here. If you wanted to get it, yeah, you would have had to just enter directly like this, and then safe target here. And then we can also target those lows because that's what it looks like. It looks like price was just like we can see it's really bearish like that.
Yeah.
And yeah, and then that's it. So that's like an example of when maybe your bias is wrong, but you're still able to get a trade here, change it, and maybe even look for those shorts because we're waiting for confirmations. And on the 15-minute it was a sweep, even though we did get a 5-minute. It was not enough because the 15-minute is higher and it showed us that it's just going down lower. Does that make sense?
Yes, it does. Just too many moving parts in there, so it's hard to grasp it all in.
Okay. Do you want to share your chart and then we can
Mark it
we
out.
can have a yeah, you give it a go. I'll stop sharing. You give it a go and I'll see what you're doing and see if
Okay, if I'll get it right.
see what we can do. Yeah.
Where do I even go share screen? Where you go share screen?
If you just like go over like our names and then it will pop up and say share screen, I think. Like I'll send you a photo on Telegram.
Yeah.
I just move your mouse around there
Alright, cool.
and it should.
Yeah, share screen. I copy. Yeah. Can you see on screen?
Yeah, it's just yeah, I see it. Perfect.
I think I was doing a bit of backtest.
Nice.
So let me just go back. Yeah. So yeah, so I don't get my time frames to come up here.
Oh, okay. If you do full screen, you won't see it, but you can type it in. So like, let's say, type in like
On the
1 5.
keyboard.
Yeah, on the
115.
keyboard. Yeah.
So the daily will be
So just type in, click comma, and then type in D. Oh,
D.
yeah.
Yeah. Alright. So, because I barely, to be honest, right, I barely use a laptop because I'm always at work. So
Got it.
I usually use my phone and stuff. But it's just from what we're doing today, it's gonna be hard using the phone from now because
Yeah, it does help. It definitely does help being on a computer, but if you can get it down on a phone as well, but you just have to honestly, it's like practice. Like you've learned a lot of new things, right? So it's gonna take a bit of time.
yeah. So just I want that thing gone off. So I can see my yeah. Cool. So here on the daily,
Mm-hmm.
you look for POIs and that, and then you look for break of structure.
Yeah. So
So I can see, what I can see here. I can see break of structure.
mm-hmm.
What else do I
Sweet.
So if I don't see no POIs, do I just skip across then? Unless
Yeah.
unless I see that
But just also like just zoom out a little bit, like keep and look to the left. Yeah, because you're missing a lot of information. So important that you see that we took out this high
yeah,
because that's going to be some buy side liquidity. We took out this high buy side liquidity and then look left even more to see if there's a point of interest to the left. And yeah, because remember, we want to see price always tapping into like some sort of point of interest. So yeah, now you can see that we've tapped into a daily order block as well.
yeah, makes sense. Yeah. All right.
All right, cool. So that's literally all you have to do on that time frame is just check if we've tapped into any point of interest, swept liquidity or broken structure, and then you can move down to the next one. So the 4 hour.
Yeah, and then on the 4 hour, I look for
Okay.
same thing. I look for
What was
FVs
that?
and
Sorry.
POIs. So on the 4 hour, I look for POIs and then
Yep. So
break of
POIs
structure.
and then yep, perfect. So you can see price tapped into that 4 hour fair value gap and it took out liquidity that high.
This one.
Yeah.
All
Oh,
right.
sorry.
So,
That high. Yeah, yeah.
so that's the
Where you're
POI,
from.
and that's the liquidity, right?
Yeah. And then also what you should do is draw a premium and discount from the high to the low and see.
Would it be this high or that high?
Yeah, that one there.
This one.
Yeah. Because that high, what it did, it swept this liquidity, broke structure. So then you can draw it from, yeah, that high to low. And now you can see that we took out this little high, we played into a fair value gap. So yeah, sorry, I shouldn't say, but yeah, so then
Yeah, I'm listening. Yeah.
you've got your next kind of thought process of what could happen.
Yeah. All right. Cool. Why? Soon. Don't worry, I'm just talking to the missus. Um, what was I even gonna ask? Um, let me see. So, let me see on just the daily again, just to figure something out. No, you're fine.
Yeah, sure.
How do
You
I
just have to type in comma and then, yeah.
see? All right. Cool. All right. Cool. So that is I think this is me fast forwarded, isn't it?
No, that should be fine. Because
Is
that's
it?
the fair value gap it tapped into, yeah.
So, all right. Cool. 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 All right. Makes sense.
Mhm.
Then I'll move on to but I still see a break here, don't I? Break of structure there.
So for me, I want to see a high. So how do I explain it? For me, a high, like all these fractal stuff that you're showing, is that why you're saying it's a break because it broke the fractal here?
Yeah.
So for me, I want to see for a high to be a high, it needs to break a low. And this high here did not break a low.
So like internal low. Oh, so
What's high?
that's like in internal high, whereas you would rather want to see this high broken for it to be bullish.
Yeah, yeah. Or like you see this high here, that was just a wick, right? That took it out. If you draw that high over like that.
Yeah.
So what, and then we've got to remember like the daily is bearish. So right now, any breaks higher, once we get into the premium area and we tap into a premium PD array, like a 4 hour fair value gap, that makes me that makes this retracement here, it's almost like it's done. It's likely now that price can move back down because we know we had a break here. We tapped the daily order block somewhere here, and then we pushed down. We took out this liquidity, pushing down. We swiped this, pushed down. So we expect now price to come into a premium, and then not going to say what we do because you need to show me that, but you can you can catch the drift.
Yeah, I get it. I'm slowly getting it. It's just loads of like, mechanics.
Yeah,
So yeah,
it takes time.
practice, doesn't it?
Hmm.
So yeah, we're taking that. So that's all I can see on the H4. So
Hmm.
I'm gonna go on there 1 hour, and then
So
think
what I might say is just draw up the premium, sorry, not premium, draw
the
the
line
kill
for it.
zone.
Yeah, I
Yeah,
think
like
I've
so
got
you,
the London, the blue. You see them blue lines there?
oh yep, yep. Okay.
Yeah,
Sorry, I thought you were doing it for like this next day over here. That's what I thought you were analyzing it for. My bad.
yeah. So when I get to London, it will just pop up.
Got it. Okay.
Oh, dear me. This is typical. Like you going for like a class and they show you 1 plus 1 is 2, 2 plus 2 is 4. When it comes to exams, it's like 5 million divided by 6 times 5. So like this is literally me absorbing everything. I go straight into exams, and then it's like the hardest bit to do because we didn't even get to London and it's just dropped.
Yeah. So what I would say is draw your or take the replay tool and put it like back to take away these candles. Or just do one more so your Asian session's done. Yeah, perfect. Perfect. That's fine. But that first hour is fine. It's not London. So
Yeah,
from here, yeah, the on the 4 hour, like there was not much to see, not much left to see. But
yeah,
now you've got your 1 hour. So
yeah.
that's actually if you just remove that last 4 hour candle, just so it doesn't show us there.
That's another block in it.
There you go. Perfect. So
Oh, okay. So even let's say the day's finished, and then I've marked out my daily, and then I've
mhm,
marked out POIs and stuff. Even
mhm.
before London starts, I should still start from the H4 before I start going down.
Yeah, always. Even the daily. So I will like do you trade London session or is that too early for you?
Nah, so London session is when I actually start work.
Oh,
So
okay.
if I'm lucky, sometimes I can see it. Sometimes if I'm busy, I just let it go.
Okay, sure. So what I do is I'll normally get on the charts. Maybe now because it's become a lot easier, I get on like 15 minutes before, but before that, I'll get on like 30 minutes before. And then I'll do that same process, go from the daily 4 hour, 1 hour. Um, yeah.
All right, makes sense. All right, cool. So then I need to mark out the it'll be there, don't I?
Hmm.
And then I can go to because now London is gonna start. I can go to the 1 hour.
Yeah, perfect.
And then we have a fair value gap here.
Mm-hmm.
What else do you have? We have breakout structure there anyway.
Mm-hmm.
Fair value gap. And I'll just wait for that. Because we're coming from high time frame, so that wouldn't matter, would it? That fair value gap wouldn't matter. Yeah.
No, so what that might do, all it probably can do, because like you said, we're coming from the higher time frame and can't say what we're doing because this is for you, but yeah, this might cause a bounce. That's all. The order block and fair value gap. But if we are moving in the direction of the higher time frame, it shouldn't matter too much.
All right, and then you consider that to be trend line liquidity, these two here.
Yeah, in the future it could be. Like it could be, but in the meantime, like we don't have to really worry about that because
So
remember it
you
has to do something first.
so you only look at trend line liquidity after the market is starting to show you signs of reversal.
Yeah, so if I'm bullish, then I'll look for it. But there's no point right now because we're not moving very bullishly. But what I'll see here instead is look at all of that.
That's equal lows.
Equal lows. So equal lows, or if the trend line traders will see this, they'll like have, oh sorry, I'll clear that for you.
Yeah.
They might even start drawing it out like this. And they're wanting to buy it as it comes here because they're expecting it to go up. So that's just going to create more liquidity there and give us more reason to go down.
All right, sweet. So I'm gonna wait for London to open and see how it reacts of that 1 hour order block and then the fair value gap on that.
Perfect. Yeah.
Now you've got 4 hour order block here and then you've got 1 hour order block here.
hmm
So I would go probably to 5 minute or 15 minute as it comes in there to see.
Yeah. And even now, check your 15-minute time frame. And then you can see like what's happening in there.
Cool.
Yeah. And then you can see like, yeah, there's a 15-minute fair value gap, but it's not really that important because you got your one
So I'll
hour
mark
order
up.
block.
Would I mark up premium discount here then?
Um, so what happens sometimes when price pushes down really fast, so when it's like this, really, really fast, if it doesn't have a reason, sorry, excuse me, to go to premium, for example, if this is from this high to this low, this is the only liquidity in the range. So once it takes this out and it taps into a point of interest, it doesn't really have a reason to go any higher into a premium pricing. So then it can just drop.
Okay.
Yeah.
All right. Cool. Um, where was I? Oh, there. So I'm gonna wait for market to come here
Mhm.
and then it's
Okay.
tapped into the order block.
Yeah. Stabbed into it. And then what
Is
you
that
can
order?
see is,
Yeah.
well, if
Yeah.
you see it was just a sweep of that liquidity to the left.
Yeah. That. Sweet. Um, would I go lower time frame now to see if I'm gonna
Yeah.
get breakout structure? So that would
Mhm.
be 5 minutes.
Yeah. We can check the 5 minutes. So, um,
That would be the low I'm expecting to break on now.
yeah.
Yeah.
hmm
So I see fair value gap here. I see
hmm
order block here.
hmm
But then ideally I could take it 50% here.
Yeah. Exactly.
Cool. My brain is literally fucked. I
Nah,
don't
bro,
even.
you're doing well. Don't worry. It's
I
a
know,
lot to
right?
take in.
It is a lot. Let's finish, right? I am in the army, but then I've done loads of stuff. But this will probably be the hardest thing I'm ever doing in my life.
Wow,
I've
that
given up.
says a lot.
I've never given up any time, but then I've never quit. But then I
Mm.
always try to get it. But then the thing is, you let me see. All right, thanks for that. You didn't come back. Cheers.
Yeah. No, honestly, this day, I wouldn't have got a trade. Even like go to the 1 minute just by looking at the 5 minute. Like, I don't think the 1 minute I would have got much either. Uh,
Even the 1 minute was tight.
yeah,
Nah, it didn't even
in
come back to it.
yeah, like your only chance may have been like if you entered here, but I
Break.
would have worried. I would have had to, like put your entry here and then your stop loss there and see what it would have been. How many pips is that? That's like, yeah.
4.7-ish.
Yeah, so
Uh,
like
3 hour.
that, yeah, and but the thing is we are going off like if
Time
you
frame,
now go
bro.
to like, yeah, so and you tap, so that's another like important thing. If you tap into a higher time frame point of interest, the move is most likely going to be a lot bigger. So like
Alright.
you tapped into a 4 hour order block, so you could expect a bigger reaction.
Yeah.
Yeah, but yeah, that would be honestly like the only way I would have been able to enter on this day is if I did it like that, because it just dropped, like it didn't give a chance to enter. And even though that is really, it can be really frustrating, um, it's like you did everything right. Your analysis is right, your direction's right. The market just didn't follow your trading plan, as in like it just didn't come to your entry. And it happens. Like, bro, I've had trade, like for example, the sell yesterday to my buys. I missed out on that trade by like a few point something pips, but there's just nothing you can do.
Yeah. It happens, and that'll be if this was a trade that I had analyzed like tomorrow or your time today, and I missed
Yeah,
it. I probably have lost my head because I'd be like, what is actually going on?
yeah, for sure. No, it can be very frustrating. Don't get me wrong. It really, really can be frustrating. Um,
Yeah.
but and then that's when it all comes down to like psychology part of it and everything. Um, where it gets yeah. Like I've had days where I've like it happened to me a few weeks ago. I took a short and I put my entry somewhere and then price just missed it. So then I went lower to try and get it. Price took me out, my stop loss, and then it went to my original entry and then dropped. I lost my mind. I absolutely lost my mind. And then the next, like, it took me a while to like be chilled, which is not good. But the next day, I was like, did I really just get that upset over one loss? Like,
I
what
know,
is
right?
one loss? Like, come on.
Well, you win a lot,
Um,
but then I don't
yeah.
know. Jesus, this so this year will be my third year trading, and
Hmm.
then because I was doing more of using my own money. Like let's say I'll drop in £50 and I'll be
Yeah.
trading off it. Maybe I'll drop £20 trading off it. But then
Hmm.
whenever I lost, I would never look back into it. I'm like, to me, money is not the problem
Hmm.
because I've got a secure job. But then we always want better, and we always want something better.
Of
Uh,
course.
and then I'll lose the 50, I'll lose 100. Maybe I'll make maybe £10 of it, all that that stuff. But then
Hmm.
what I learned again was someone advised me if I'm not learning nothing from it, then I should buy challenges. So in that case, at least if I lose a challenge, I know I've lost a bit of money. So this year, I think this summer would be a year I started doing the challenges. and I've literally not even got. I think it was one time that I got 5% up, but
Hmm.
that 5% up, I lost like 6 trades in a row, and I lost. My psychology just broke down again. And
Okay.
then since then, I started going back to ICT. I started going back to structure. But
Hmm.
the thing about ICT, it literally it doesn't stick. It does
Yeah,
stick, but then it's hard, you know.
it's very hard. Like I'll let me let me share my screen.
Yeah, go
I
on.
forgot I want to show you how I back test and stuff. But
Yeah.
yeah, like most of my success came like I had at the time I was at uni. Let's share my screen. Can you see my screen now?
Yeah, saying yeah.
Sweet. So let's say we're going. Um, so I was at uni at the time and I had like a uni holiday
Hmm.
and it was like 2 weeks. Bro, I promise you, I woke up at 5 a.m.
To back
and I
test.
would back test from 5 a.m. till like 8 p.m. I didn't, it was like unhealthy, bro. I didn't go to the gym. I didn't really leave my house that often. Like, I was just like, and time would fly by. But I was so frustrated because I wanted to understand it so badly. And I would look at the same thing. Like, I look at this, let's say, like, for example, like this area of price action, I'll just be like, what the hell is going on? Like, how would I know that this is now going down? And yeah, eventually I started to get like a process of how I look at price, and then it came together. But
Wait,
I
one
was like,
second. Let me stick my charger on before I lose this connection.
yeah, yeah, sure.
Do you just one more thing? Do you know the laptop I'm using? Yeah, I've
Yeah,
I just bought it for trading,
sweet.
and I've literally just bought it like I think 3 months ago.
Yeah.
Yeah, but yeah. So yeah, carry on. Yeah,
Um, So yeah, and then finally after all of that time, like it clicked, and then I started to have like a bit more consistency. And honestly, it happened when I just started looking at the higher time frame because I wanted to get direction right, and then high
yeah,
time frame shows it. But I'll show you how this is how I back test, right? Um, this is I think it's the most honestly the most effective way to back test. I might be biased, but um, let's say let's just go here, right? Similar to the where we were before. I will look at like, for example, let's say the day that we just back tested, that you were doing. I will
yeah.
look at this and I'll be like, okay, why did price move from this area? What happened? I look across, I'll see a 4 hour order block. I'll be like, okay, so price moved because of a 4 hour order block. What did this 4 hour order block do? Okay, it took out a bunch of liquidity this 4 hour order block and then broke highs. Okay, cool. So now I know, okay, this was the reason for this push. Then I'll look on like this and I'll see, okay, we reversed from here. Why? Because we took out this high that was liquidity. So we didn't break structure, it was just a wick break. So then we move lower. Then I'll look like the exact same thing. Why did this high go down? Or why did even here? Why did we sell from here? If we were on this day, and this is just with a 4 hour now, and I'm looking at this and I see this fair value gap. I see, oh wow, we closed a fair value gap on the 1 hour. We tapped into this order block, these two order blocks on a 1 hour time frame, 15 minute we closed the fair value gap. So, okay, we have a bunch of fair value gaps. We're moving lower. Structure is just bearish. This is now going into premium. Oh, okay. And then let's say like a 5 minute time frame. Oh, now I've got a 5 minute break of structure and a fair value gap. Maybe
And
that's
order
my
block.
sign. I'll and an order block. Exactly. Maybe that's my sign. I enter on the 15 minute. I can target here, 4R. Or because I know I'm on a 4 hour fair value gap, maybe I'm going to go lower and target here. I just need to see what's happening. But let's say now it's easy because I know price took out this low. Let's say price, I don't know that it's doing that. And instead, price comes back and takes me out at break even or whatever. Then I'll know, okay, conservative 4R was the best option. So that's how I backtest often. I try and find the reason as to why something's happened. Like, for example, right now, how do I know that this now is going up instead of keep
Down.
going down? Well, what I see here is we took out this daily low with a wick. So that means that's showing me it's got reason to go higher. So let's go on a 1 hour time frame and see what happens. 1 hour time frame, we don't really have a 15-minute break of structure, but what we do have is here we have this closed. Oh, it didn't close. It created like a trap basically. So I can see we sold off from here because of this trap. And then I try not to view like what you can do is like limit it to your session even. So like let's say
Was
how
that
could I
not
have got
an
trade
order block there? You know, where when London
here?
started that, yeah, that is that not, would you not call that order blockers? Don't know.
100% order block as well. So you just got confluence, fair value gap, and an order block with liquidity.
Yeah.
So all these people, not all these people, I don't know how many people, but like these guys here that are seeing maybe like a 5 minute, they're like, wow, we are so bearish right now. Meanwhile, this didn't tap into anything. Like this, I mean, it tapped into the fair value gap, but why would it leave such a little gap there and like order block untapped? It just pushed down for no real reason. Then price went lower. Now we could have drawn out this or this because here's two in a row. So I'll just I'll draw out. I'll keep in mind that there is an order block above it. I'll probably draw out this. Keep in mind here, and then I'll see. Okay, what happened now is we took out these lows, 15-minute time frame. Okay, we swept here. Interesting. We did a sweep on a 5 minute time frame. We got a fair value gap. Let's say 3 minute time frame now. Okay, we're just breaking. We broke here. We're respecting. Oh, I could maybe enter off there. Now it's London session, and then I'll take it to here, and then I'll see could I have had an entry here. We have a sweep here on a 5 minute time frame, but then I can't go to one. Can I go to 1 minute? I can. I can see here. Unfortunately, I wouldn't have had an entry. Price ran away. Nothing I can do.
Yeah.
And
So
then I
even
can,
on the 1 minute, you still look for your FVG, yeah.
yeah, I must have a FVG to do that, to enter.
Okay.
And now I can see price goes lower, 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 lower. Okay, what's going on here? We took out this Asian low,
Mhm.
and then price, there was obviously news here, 8:30, and then price went up. So I can see that we took out this, we could have had a sell here, and once we broke here, we took out Asian lows, this pushed it up. So I'm like, oh, okay, so now I'm starting to understand the why behind things are happening. And then I'll see, okay, let's say even like, because I'm not caring to see it in replay and be like, oh, I would have caught that. I would have done this. I just want to know what worked, what actually worked. And then I can see here was the fair value gap and an old Asian high.
Yeah.
So that caused this move down. Then I'll see in London, okay, this move tapped into this 4 hour fair value gap. What else was there? We had the 1 hour, we had the 15-minute sweep. And it just almost becomes like a process of finding out the why. Um, does that kind of help with the back testing stuff?
Yeah, yes, massively. Because before I would just replay, and I'm
Yeah.
moving forward, and then I'm like, I don't even know why it's moving from there. But I think it all comes down to what your risk to reward is. So if you're looking for, let's say, minimum of 3 hour, then
Mhm.
you would, because before I was thinking, why is this move 3 hour? Why is this move 10 hour? Why is this move 20 hour? And it just confused
Mhm.
me. But whereas if you've got priorities like 3 hours your minimum,
Mhm.
or 3 hours is where you break even, whatever, then you
Mhm.
can find out every 3 hour that comes in the market, they'd move from a particular POI.
Yeah, exactly. Exactly. Like often, not often, but some people will they'll look for like entries at random areas. What like for example, someone might have said this is a break of structure, this 5 minute high here.
Yeah.
But what did this tap into? What did it do? This did nothing important, so it shouldn't work. But then once we took out this Asian low, then it's something important. Or we could even go further into it and say this low here was the last bit of liquidity, internal range liquidity of the range from this high to this low. So once it took out that, it literally had no other reason to go lower because then it has then it has to take out this low. But
Yeah.
that's beside the point. It just has to do something that's important. Otherwise, it's not the break's not. And what's important is it taps into like a point of interest or takes out liquidity. Um, yeah. And then the easiest in terms of like risk to reward and I'm so like risk management, how much do you take per trade?
As in,
Like
zero point
how much
0.5,
do you risk per trade?
0.5.
Cool. So 0.5% per trade.
Yeah.
Then we can do that's perfect. 0.5% per trade. How many trades do you take a day?
Whatever I see.
All
The thing
right,
is, right,
cool.
when the trading is not going well for you, your psychology just breaks, and then sometimes you see trading Asia and you just take it next day. It's just you're out. Basically, that's what's happening to me.
Okay, cool. I would suggest uh it might not be as exciting, but instead of two trades, two losses per day and done. So if
Yeah,
you take two losses, you're done.
yeah,
If first trade is win, finish trading.
yeah.
That can be really good because like why give your money back? Like in end of the day, we do this for freedom, right? Trading is like so we can have a better life, freedom. So if you can get one trade in the first hour or whatever,
Mhm.
like you don't have to make any more. So there's that. And then we have so if the first trade is a win, finish trading. Um, Even if you have one, you know what? Let's just call it two trades per day and done. If you have break evens, then doesn't really matter, unless your commissions keep adding up and go past like 1% loss. Um, but yeah, you could have like one loss and then one win, and you're done.
All right.
That this I promise you will probably say if people followed risk management like this, probably save your account because yeah, it just like it takes a lot. Sorry, it honestly takes a lot to be able to like blow an account doing this because that's 1% per day that you could lose if you have 5 trading days. And then you can even go further and say that if you have, let's say, if you're down 3% down for the week, stop trading.
As in on Monday, let's say, or maybe Thursday, if you present down, just done for the day, done for the week.
Yeah, yeah. So that means for you to be 3% down, at the worst, you would
Six
have to
trades.
have lost your 6 trades in a row. Two on Monday, two on Wednesday, two on Tuesday and two on Wednesday. So that
Yeah.
means something isn't right. Your psychology is not right, trading plan's not right, something's going on. Don't keep giving your money away. Wait, back test, don't trade, figure out what's going on, and then next week go into it again. Like now the good thing is a lot of prop firms like don't have a time limit. So
Yeah, I've seen that as
um
well.
yeah, so there's no rush. Now this is what people don't talk about, trade management.
Yeah.
So what are you going for at the minute, like in terms of risk to reward, and do you have anything in particular that you do or
1 to 4, 1 to 5. Well, the thing is,
Mhm.
I've never passed even phase one or phase two, so whatever I say is kind of pointless. But I do
No,
try to
no,
reach
it's
for
not
1 to 4,
honestly.
1 to 5.
Okay. And do you find that your trades often, like they often get to, if they're a winner, like not the ones that go straight to stop loss, then they don't count. But the ones that are winners, do you find that they often go to four or five, or do they
Um,
sometimes go to 2R and reverse often? Like, how does it work?
yeah, most of them go to 2.5 hour, and then it will just come back to break even and then go back out to take
Okay.
profit.
Okay, sure. So, and when do you go to break even?
Usually, what I do is I don't do break even. What I do is I take partials and I leave it. So
Okay.
let's say it gets to, let's say the whole trade is meant to finish at, let's say, 4 hour. It gets to 2.5. I'll break even and I
Mhm.
leave a runner, and then it will just come back to break. It will just come back take me on stop loss.
Okay, sure. And how much are you like what's your how much do you partial?
As in actual money.
Yeah, like you said, like you'll take partials at 2.5R. So like
Oh, okay. So I'll split into two. So let's say 2.5 hour. Let's say I've made I'll split into two. I'll take 1.5 or maybe two of that
okay, so
2.5.
like you if you have like if you risk like let's say 0.5% per trade, you
Yeah,
close like 0.25% at 2.5R
yeah,
and then you let the rest run.
yeah,
Okay, cool. So all right. I'll tell you how I do my trade management because it's like this is for trade management is actually very personal. It's based off like what the person, yeah, what the person, their risk, what they like to do. So take mine with a grain of salt and then see what you will like to do. But basically, I will, how I like to start, except, well, not really yesterday, but I start the week taking 3R. So my first trade, I start with 3R. And the reason I do this, I think trade management has to go hand in hand with psychology. If I'm up 3R already for the week, I know I've got three losses in the bag. Like if I take now, so this is my Monday, I take 3R, I'm done. Then I know Tuesday I can have two losses, Wednesday one loss, and then I'm back to break even. So at worst, I'm gonna finish my week with maybe like -1% or -2% if I don't get another win. So
yeah.
that's one thing that I do. The next thing, if I take a loss, the next trade, I usually TP at 3R. Now, the reason I do this is because, again, psychology. If I'm taking like loss after loss after loss, and I see, let's say I see my trades running to, I want to go for 4 or 5R, and I see my trade going to 3R, 3.5R, and it reverses and stops me at break even. I don't even get a stop loss. I get taken out at break even. It's going to be like it's going to make my psychology worse. I'm going to have more chance of even losing the next trade because now I'm pissed off that I've lost the money when I could have been break even or I could have been a bit in profit, and now I'm at and now I'm just like I'm back to where I was in a loss. So
Yeah.
that's very important for me. Then after that, I'll go if on a win streak, so one or more, I'll go for 4/5 R depending where liquidity is. So basically, yeah, I'll do that. Also, depending on and depending we hit. So basically, like if we hit a 4 hour order block, it's very likely that we're gonna go for 5R. The higher the time frame, the more the move will be.
Yeah.
Um, and then trade management, I move to break even when I break 5 minute structure.
All right.
That's yeah, that is pretty much all I do is that I do. So my risk management is honestly it's basically what I've shown you here. 0.5% per trade. 2 trades and I'm done. First trade is a win. I'm done trading. Like yesterday, completely done after that trade. Uh,
The internet is getting really bad. Yeah.
and yeah, this is it.
Hello.
This by doing this. Sorry, I'm just having water at the moment.
Hello.
My
The
throat's
internet.
so dry.
Yeah, internet is bad as well. I think it's
Yeah,
bad.
by doing this,
Mhm.
uh, hello. Yeah, from my phone. Sorry, one sec. My like where my office is kind of far away from the internet, and sometimes it just gets unstable. So I had to hotspot.
Oh, okay, sweet.
Yeah, I was just saying by doing this, honestly, like you, if you follow these risk management rules,
Hmm.
you probably most, even if you have a bad trading month or bad trading week, like at worst, like you have to basically lose every single trade that you take for a month to blow your account, to blow a prop firm challenge.
Just can't wait to even pass phase one.
Yeah.
But I think what's really put me in the dirt for a long time is so with me when I started trading, obviously I didn't know what I was doing. I was just I followed them. I bought few not courses, but I did join few mentorship. There weren't even mentorship, it was just people on YouTube and I joined them. Don't know if you ever heard of what was his name? The guy who was using Ichimoku Cloud. Have you ever heard of him?
What's his name?
PMG trading or PGM trading, something like that.
No, I'm
Yeah,
not
so
aware.
I think that was the first one I bought, and I found offshore, and I found uh, chart engineers. But
Hmm.
with offshore and then chart engineers, their strategy basically was reversals. So let's say previous daily get wicked, then they'll look for a reversal. Maybe monthly gets wicked, they'll look for a reversal that direction. I did try it. I used all the trade management and then risk management, but then when the market is trending for like a week, you'll be in the dirt, and it was really
Hmm.
bad. And then I met a guy, which I'm still in their platform. He trades ICT solely, but then the way he trades is so hard to understand because every day he's doing something different.
Yeah.
And then I'm like, what are you doing? It's not helping everyone. It's not helping anyone. So let's say today we use Fibonacci, next day we use structure, next day we use order block, next day something different than every time. So I've been with him for like almost getting to 2 years now. So
Hmm.
I found out it's not working. And then if he tell you go watch ICT, he'll come. If you ask him how did you come across this, he say watch ICT. I'm like, mate, you
Yeah.
think you want to help people, but you're not helping anyone because end of the day,
Yeah.
even if today you did trade reversal, next day he's trading break of structure, next day he's trading monthly, yearly charts. I'm like, bro, what you doing here? And
Yeah.
that's really
These
drug.
people
Mm.
that these are the people that I swear they're making their money off their course, not really trading. Like,
Well, he's not even selling a course. He's just there. He created a platform, but he's not.
uh,
He's making money, all right. But he's
mm,
his setup. If you try follow him today, tomorrow he will do something else. He was on Josh Chat as well. He was on that platform as well. He's always bringing something new up, and then I'm there like, can you even trade one system for like a week? So at least
yeah,
we're thinking, so we know how the losses are like. Because with him, when he gets a loss, he'll go to different strategy. Because he's really good, but then being with him for that long is really put him in the dirt. And then
yeah,
one day he'll come and say, all right, trade management, trade one pair, one strategy. But following day, you find him trading um, futures, you find him trading crypto. I'm like, what are you doing?
yeah, yeah,
So I could be trading Euro USD, and then he one day he'll just post GP JPY and like, what do you want me to do? Do you want me to go? That's really put me in the dirt for a long time, and then it's literally dragged me.
yeah, yeah. I definitely suggest like for me the like I wouldn't say do this because everyone's different, but for me I found it the easiest. I used to trade GU, EU, and AU,
Mm.
and one, I couldn't focus on all of them at the same time. It was just very hard for me personally. And then two, I just like it was so much easier just having one pair. I found EU was like EU always has like the lowest spreads. So that's why I wanted to pick EU for whatever reason. That was my reasoning. And then yeah, I just started back testing that always and that's what worked for me. So
So that
um
backtesting thing took you 2 weeks to madly go through it.
oh, that no, I didn't even I didn't even understand it. And even then, I didn't understand. I was like, yeah, I was really crazy. I was going like I couldn't work it out. I will be stuck on something like this. I
Mm.
promise you. Like I wouldn't even progress to the next day. I will look at it for hours and I'll be like, but how? Because I would say like this is a BMS here and we're bullish now. We're bullish. Like how can this be this? But the thing I didn't understand was liquidity because we took out buy side. We tapped into a high time frame point of interest.
Yeah, quick
So
one. Which one is more powerful to break of structure or liquidity grab?
bu- it's a hard one. Because they kind of go hand in hand. What do you mean more powerful?
As in, um, let's say let's say you're on the H4 and then you've
Mhm.
seen liquidity grab like pure, like when you look on the left, yeah,
Like
there
this?
is being
Yeah.
wicked. But then when you come below, I don't know if it makes sense. So sometimes you could see there's a grab of liquidity on one side, and sometimes, and at the same time frame, you could see a break of structure on the other side, and it
Oh
happens
yeah,
a
I
lot.
get you. I get you. Like let's say I think maybe like it wasn't really a grab, so to say, but like are you saying like maybe here if this was a grab or not, or are you
Yeah,
saying like here?
no, so
Oh
there,
yeah,
I would say that's a break of structure in it. But
yeah,
when
this
you
one.
look at when you look at yeah, that's liquidity grab in it.
Yeah. Um,
But at the
so
same time, all right.
this is
So when you look
bullish.
when you look to the left,
Yeah.
left, you know, the on the seventh. Yeah, when you go right, right. Yeah, left. That bullish candle there, in between the seventh and the eighth.
Here.
No, my bad. So yours is the other way. So the bearish there, yeah, that wick. It wicked the one on the left and on the other
Oh,
side.
oh, yeah, gotcha, gotcha. Yeah, yeah, yeah,
So
yeah, yeah.
that is a wick. But then
Yeah.
when you look on in between the, if you go in between the second and then the fifth, the bearish candle there. So
Here.
keep going left, keep going left, left. So not even there. Okay, I'll give you an example. So when you come back to where the seventh is, all right, you see that break of structure there.
Here.
I know you just told me you usually want to use a high that's broken structure
Yeah.
to break before.
Talking about this one.
Yeah, and that will
Yeah.
be a break. So if
Mhm.
that was me, I would have been well confused. All right, we've broken structure, we want to go high, but at the same time, we grab liquidity, we want to go low. What do I
Yeah.
even do? Do you know what I mean?
Gotcha. Gotcha. Yep. Yep. I get you. Okay. Cool. So what? This is the beauty of it. I'll go to the lower time frames to show me as well. So I will keep in mind that this was our daily break and this is our range from here to here. So if this is our daily break, once we come into discount, um, we'll be looking for buys to go up and take this out, right? Because if the daily has moved bullish, or if anything's bullish, it should be going like that, breaking highs.
Yeah,
So once we get this, I'll look and see. I will pay attention to this as a little break, but it will be more like on a 1 hour time frame that this is a break. So I'll pay attention that we've got a break here. And then I'll also look and see, all right, what is happening in this price leg? And we do have like a little order block here. Sorry, not little, a big order block here. But at the same time, I'm seeing this. Basically, I'm seeing like um, a lack of bearish point of interest and more bullish. Here, we can sweep this and go lower. And then I'm seeing that once we broke this, once we get into this discount, we really are respecting this fair value gap right here. And then we're going higher. So then I'll look on like a 15-minute time frame and I'll see what's happening.
you are so good at this.
um, and then, yeah, I'll just have a look on the 15-minute and I'll see that in this leg here, this is the only bit of liquidity, right? So if this wanted to really go lower, remember, I'll go back to it so you don't have to remember. We can just show you. It was here, the one you just broke down. And I said that it might not go to premium
Yeah,
because it only has this high to take out.
yeah.
So it will take that and then it could just drop. So if we go back to where we were, where was it? Yeah, back to here. It's the same kind of thing. If that's the high, if it really wanted to go, it would have just gone after. So that comes into my mind as well. And
All
then I'm
right.
starting to see that we're building higher, we're going higher, we're going higher. And then we do get this that goes lower, but it's just coming in here to take out this liquidity into a higher time frame order block. And
Yeah,
it's almost like this whole thing again, accumulation. We could think of that as manipulation. So I don't want to say that, but yeah, it's accumulating, manipulation, distribution. And then yeah, we can look on a lower time frame, see like is there anything here that we could enter off? If we're unsure, here we go. 5 minute BMS. So that's like the beauty of it. We can just wait and we can see we've got the 5 minute BMS here. We have the fair value gap here. We have an order block here. Um, So on a 1 minute, maybe we can't enter up here. We get this break above, 5 minute order block, enter here, 5 minute, 1 minute fair value gap, enter, or wait for a break again, fair value gap. So like we can use our confirmation to let us know.
And I think one thing that's really kept me in the dark for a long time is me not seeing that kind of order block that you have on. Because I was always thinking order block has to break structure. And then I think that's,
Yeah,
yeah. Because sometimes
yeah.
I'll see market react from a certain level, and I just look
Mhm.
at it like it's just maybe one bullish candle, maybe you just pushed it down,
Yeah,
and I'm there
yeah.
like that's not even order block because I know order block is like it has to break structure, but
Mhm.
I think this is like the new order block.
Yeah, it's funny. I did I'm not really like promoting that I'm doing Zooms. I was thinking about it, but I'm just still deciding. But another guy I did a Zoom with, and he said the same thing. He's like, I never looked at order blocks this way
Yeah,
ever, but now
I've
it's
never
like so
looked at it.
nice. Yeah,
I've
because
always seen it to be oh it has to grab liquidity, break structure, the last up or down kind of like
yeah, it does. Honestly, it does help. That does like make it an order block. But even here, you can see this one took out liquidity,
mhm,
gets traded past, and then
yeah,
it traded into and goes up.
yeah,
Um, yeah, yeah. As long as it gets traded past, then that makes it an order block. But then you have to like line everything else up. But then
together.
again, this will just come from like your back testing. If you see this and you're like, well, let's say we're like this, right? How could we have got an entry somewhere here? Well, this we could see reacted off a fair value gap. And then you're like, okay, how could we have got this? If you just look left, it's like, it's literally right there on it. So you'll
Yeah.
have to know that was the reason why. Um, yeah. And even in this day, let's say you were bearish, right?
Mhm.
Let's say you're bearish. We tap into this fair value gap, um, and it was a bullish order block. We waited for this high to get swept. So here we wait for the high to get swept. And let's say you were even bearish here. If you wanted to take your entry, you didn't get a confirmation. Um, it didn't actually happen on this day, but again, if we could have got like a break and then just enter back, you could have got a short going into this area, and then you will take your, like, let's say here, so we entered something like this. The target could be 3R, or let's say this low here, and then you're done. And you might have thought that we're going to continue bearish the whole way because we had this 4 hour sweep. But then we got it wrong. But you already made your money off that little move.
Yeah.
That's the beauty. That's the beauty of basing it off a higher time frame. Um,
I've got so much to learn.
yeah, just
And
don't overwhelm yourself. Um, just let it take time. I'm happy. Like, just message me if you got questions. Yeah.
yeah, because you
Um,
know what I was about doing is because I'm in the army at night and I've been in the army for like 10 years now. And then the army is so tricky. If you stay in for so long, you end up doing 22 years. You wouldn't even notice it. So if
mm.
I've literally just signed up for a cybersecurity course that I've started.
Oh
But
wow.
then you know when I'm doing it, I don't really feel it. It's just
Mm.
I know I can do it, but then even when I'm my computer learning cybersecurity, I'll just switch back and start watching charts and I'm trying to back test and have a clue.
Yeah.
Yeah, it's more like the chart, like the forex trading, it's literally dragging me saying you need to come back here. But then because I'm not getting it, and then I haven't had anyone to take me through like pure like breakdown and lessons like this,
Yeah.
I was about giving up, not giving up, but then my mind cannot give up on it. That is the
I
point of
know.
it now.
I know exactly the feeling.
Yeah, my
I
mind cannot
know
give
it
up on
so
it
much.
because I'm that kind of person. if I haven't finished doing something, I wouldn't quit.
Yeah,
Yeah, I've
yeah.
done loads of stuff in the army that I thought I was gonna die, but I didn't die. And then I just can't find ways to understand why I'm not getting this forex trading.
Mm-hmm.
But then
Yeah.
I think today is gonna be one of the breakthroughs for me that I can actually start seeing things.
Bro, that makes me very happy. Honestly, it
Uh,
makes me really happy. Just yeah, keep back testing, like try and see like the reactions. For example, I'm just like looking here. I see there was a reaction. We have this order block here. I see there was a reaction there. Um, it like you obviously don't have to have every single reaction, but you can just start to like,
mhm,
yeah, you can start to notice at areas what what was the reaction at, let's say, this area. So we had here created a fair value gap, didn't do too much, didn't do too much. We broke here eventually after. So like even though this is it won't always be like picture perfect, right?
mhm,
But what I can see from this is this swept here
mhm,
into the 4 hour fair value 4 hour order block, which is also like a 1 hour.
mhm,
So like that 4 hour. Then we have on the 5 minute, we have no break here, but it was a push above, and it created a fair value gap. Then we don't really get a break again, so I'm like not really interested. Then we get here a sweep, and then we get a break here
So this
with
would
a
have been a market structure shift, not the other way around, because it's still
yeah,
the lowest low not taken in it.
yeah, yeah.
The low,
Um,
the low just before 10 o'clock on the left.
yeah, yeah. It's this even isn't a market structure shift because it should be like it should be like this, and then again it goes up, and then
Takes
like that. But we didn't break this. This is some. This is actually like you shouldn't really trade this. This is like
late.
after 11, market slowing down. But I'm just showing that even though it's like that, it's still like you still could have caught something here, caught something there, caught something there, just based off like that 4 hour, then 1 hour sweep, and then yeah, it's just honestly just waiting for price to show you what it's doing. Too often we guess rather than showing us. So like if price now instead of this just went like this and then went down and down and down, even if I thought we're buying from this order block, like what does it matter to me? I didn't lose anything. I got it wrong, but I didn't lose money.
All right. You know that H4 reverse out there at the top?
Yeah.
Yeah. Would you have caught that?
Probably not. Uh, yeah, probably not if I'm honest with you. 5 minute here. I mean, not every. Sometimes you don't need a 5 minute break, but I don't know how to see that yet. We'll see that with higher probability. I'd rather miss a trade than take a bunch of losses. So even this, I don't like how this just wicked this and wicked it again. So I don't know if I'd take this. When we broke back down, maybe I'd take this.
Mhm.
Uh, mm, Probably wouldn't, if I'm being completely honest. It's not even in kill zone, but I probably wouldn't have taken that. But then afterwards, let's draw the kill zone. So 7 to like 11 here, and we have, let's say, from here to here. So yeah, 50%, 15-minute time frame. Hmm. I would have wanted it to come into here, which it didn't.
Yeah.
Then we do have it, can see it tap this little thing here, little order block looking thing, but No, I wouldn't have caught a trade in here. Probably, yeah. I don't think I would have caught anything in this day on this New York session because I would have been wanting price to maybe come into here or take something out. But yeah, it finally took out this equal highs.
Mhm.
Um, but then mm, only chance I would have had to catch something is if I took it off this fair value gap.
Yeah,
And even then, it's not even 50%. Oh, it is.
nah, almost. But maybe
It's
51.
it's this. You know what? This is the funny thing. It's the same price though. You see how it says 775 over to the left.
Where?
So you see. Oh yeah, actually no, it's 0.1 pips. Oh, what the hell? Yeah, I wouldn't have got it. The only chance I have to get this trade, and even still, I probably wouldn't have, is just if I enter here. Stop loss above there. It's not too big. And then I could target, I'll probably target 3R, something like that. And then that's it. But it doesn't really follow my plan.
Yeah.
So
So
yeah.
what exactly, if I was to ask you to write down your plan, what would exactly be your
All right. So
plan?
I need it. I always want to see price taking out liquidity, or tapping into a point of interest. So I guess it did take out this, but I was more interested in it coming possibly to this. Um, so yeah, that would be what I would be waiting for. I could see there's an order block there as well, so I might have wanted that, but
So your plan
yeah.
is high time frame POIs,
Hmm.
liquidity, and then time.
Yeah, pretty much. Exactly, yeah. Basically like the breakdowns that we just did, just putting those all together. So,
But I
let's
think
say,
my biggest problem now would be time frame selection. Because
okay, we'll just
every
keep doing the same thing. So, the same thing we do. So, you've got your time frames, right? The daily,
yeah,
4 hour, 1 hour, 15 minute, 5 minute, and then the 1 minute for entries. 5 minute, 3 minute, 1 minute for entries. So, like here, we have, let's say I'll go to the 1 hour. I can see the only thing in here on the 1 hour is this order block.
hmm
Then on the 15 minute, the only thing is this fair value gap. It tapped here and went down. So then there's nothing else I can really do there. I can see equal highs. You see those?
yeah,
So we got that. That's the only other thing. Then on a 5 minute, because we're moving so bearishly, once we take out this, I don't need to see a 5 minute break because we're already moving bearish on the 5 minute. So that's when a 1 minute break I could get and then, yeah, try and enter. But yeah, I don't like the look of all this.
sweet.
All right, bro. Yeah, let me know your questions. Just, yeah, feel free to message them to me.
Yeah, I think when I
And
start doing the proper back testing tomorrow, like
yeah,
doing random time frames, most of it will come to head, and then
yeah, and like you might even find like your own things that you like to do, or might like you might find improvements on it. Because at the end of the day, it's all how we see price. So
yeah,
if you see it better one way, like let's say you prefer using the 30-minute time frame over the 15, or like whatever it might be, or you don't like using this fair value gap, you only like using that one, or whatever it is, like just make those adjustments because no one can tell you what how you trade is wrong
yeah,
because there's
yep,
people making money with every single strategy.
yeah,
Um,
possibly.
yeah,
I
yeah,
don't know.
and don't get disheartened if you don't see it like straight away because it's something new. It will take time. So
Yeah, 100%. Yeah.
sweet, man. All
Um,
right.
so I was thinking another thing that I was thinking maybe you could do, and then most people will actually jump on your YouTube and stuff is if you actually
Mhm.
do a live trade maybe once.
Yeah,
So
I
you
was
just
thinking
record
about
it
it.
and then fast forward it and just chuck it on YouTube. And then,
Oh, true.
yeah, so let's say today's trade, you could have just recorded it and then fast forward it like maybe, because probably the whole trade took maybe 3 hours or maybe 2 hours. What
Hmm.
you could do is just record the whole thing and then just fast forward it's like maybe 20 minutes and then just
Yeah,
write up, you do the type in bit and then just fast forward the whole thing and then chuck it on YouTube.
yeah, I might give that a go. Um,
Yeah.
bro, I'm really sorry. I gotta go because I
Yeah,
need
no
to
worries
take
at
my
all,
wife
man.
to
Yeah.
work.
Cheers. Thank you for this,
All
man.
right,
Right.
see
Bless
see you,
you.
man. I'll message you.
All
Bye.
right. Cheers. Bye.